Everyone, wherever you're based. Adrian, how are you?
I'm doing wonderful. How about yourself? I mean, let's give it a few more, maybe a minute before we kick off.
Indeed. Let's wait for a few seconds. Welcome, everyone. Welcome to our second analyst call. Welcome, welcome. Get yourself comfortable. We're going to be discussing about markets, especially recently with the latest geopolitical conflicts. We have so much to uncover in this space. So Adrian, our chief investment strategist, and myself, the global head of research at 21shares, we're going to unpack the markets for the next 10 to 15 minutes, walking you guys through some of the historical patterns that we've seen in the markets and what we can learn from, especially in this conflictual environment that we've seen so far. But thank you so much for attending, guys. Get yourself comfortable, and we're gonna get started.
Should we kick it off?
Shall we?
Let's do it. Let's do it.
You gonna share your screen?
Yes, sir. Here we go. All right. All right. All right. All right. Sounds good. I think let's kick it off. Let's talk about markets a bit, Eli. Of course, a lot going on globally. Yeah, the world is changing. And of course, markets are, I wouldn't say maybe not under a lot of pressure, but also here we see a lot of volatility. And of course, we want to talk a bit about how this affects the crypto market and what the impact looks like on Bitcoin and other crypto assets. Maybe let's kick it off with just talking about, yeah, Bitcoin amongst geopolitical tensions. How has it been, yeah, behaving and reacting in the past? Are there any patterns that we can learn from? Yeah, and also the value proposition of Bitcoin, if it really in these times it still holds true. Eli, what do you think?
Yeah, it's a great question, and you can see on the screen we're looking at the past geopolitical conflicts that we experienced since 2020, from the U.S. and Iran escalation early 2020, fast forward to the COVID-19 outbreak, as well as, of course, Liberation Day tariffs, and the latest that we've seen so far, of course, between Iran as well as the U.S. and Israel. And what you can see in this table is that we compare the S&P 500, gold, and Bitcoin in similar timeframes. And the long story short from this table that you can understand is that in the short run, yes, Bitcoin can actually have heightened volatility and downside risks. But we've seen as a long duration and emerging store of value that Bitcoin has outperformed both the S&P 500 as well as gold over more than 2 months. And you could see that on the last column that across all the major events, except the latest one, October 10th, as well as even the yen carry trade, Bitcoin has significantly outperformed the major asset classes. And of course, I would curve out, the COVID-19 outbreak, especially around 2020 and 2021, because we had unprecedented liquidity in the market, which is incredibly important. So I would curve out 2020 and 2021, and that's why you've seen, of course, more than 3 digits percentage performance back in 2020 in November. But I do think that when you look at the others, clearly the long duration and emerging store of value case for Bitcoin is incredibly exciting and interesting. And I think historical patterns and data really shows that case.
I think in the short term, we also see, I mean, Bitcoin reacts quite quickly, right? Anything that happens on the world stage, of course, Bitcoin does trade 24/7. So in the past, we've seen a lot of times that something is happening during the weekend. And of course, investors and markets, they want to express their feelings, and it's being reflected in the Bitcoin price. So obviously, given its 24/7 nature, global liquidity, we a lot of times see this short-term volatility and that reaction from that asset class. Um,
Absolutely.
but maybe to move on, and I think that's very interesting because you pointed it out, Eli, Bridgewater's all-weather strategy. Of course, here we have traditional assets being included and how they behave during certain, major equity drawdowns. Um, do you think Bitcoin fits in there? And do you want to walk us through here?
Yeah, it's a great question, and I really like this framework. This framework has essentially four gradients, but to take a step back, the all-weather strategy from Bridgewater is a risk parity investment approach, and it's designed to deliver consistent and moderate returns across all economic environments, whether it's growth or recession, or whether it's rising or failing inflation, right? So by diversifying across asset classes, whether it's stocks, bonds, commodities, and gold, that all-weather strategy should balance out the risk rather than just capital, right? So instead of having a traditional 60-40 mix of stocks and bonds, this portfolio is balanced by risks amongst growth or recession, as well as risk or failing inflation. So you can see that historically, when we look at the various equity drawdowns on the back of economic crises or geopolitical conflicts throughout history for the last 53 years, that there were multiple asset classes that really provided, on average, certainly a diversification benefit. So gold is one of them, nominal bonds as well. But we do think that because Bitcoin is an emerging and long duration store of value, it should be part of that conversation. And my view, and that's my personal view, I do believe that in the future we're going to see Bitcoin as part of this conversation. And of course, Adrian and I and 21 Shares, our job is really to provide easy access to this asset class through ETPs and ETFs around the world where we're listed. And the conversation is already happening. People really take Bitcoin as a serious and long-term investment play, and that's what we've seen very interesting flows and data that Adrian is going to talk about in the future as well. But watch this space. We do believe that Bitcoin should be part of that conversation.
Absolutely. And I think it will be there because it does have the diversification benefits. That still holds true, especially compared historically to all the other asset classes. And I think the biggest comparison or the heated discussion that we see right now is truly Bitcoin versus gold. A lot of Bitcoin investors are a bit disappointed over the last couple of months. They basically seen the gold rally. They say, okay, if Bitcoin is truly a digital gold, why is it not behaving the same? And I think we want to counter that argue, and people should actually be happy about it because Bitcoin and gold have a very low correlation to each other when it comes to price. Even more surprising, if we look at investor behavior, as we can see here, they're actually inverse correlated. So what you see here on the chart are basically all the Bitcoin ETFs globally and their respective inflows. And I think it's quite evident that you can see at times, the world's attention is on Bitcoin, which fades at certain points, and that's where all eyes are on gold, and vice versa. So we can clearly see that those two assets, even though they have a similar value proposition, similar attributes, they trade very differently when it comes to the actual flows. But we think that's a good thing. Once again, because of that, portfolio managers have an additional tool to add to their portfolio and really make use of those diversification benefits. So no, I think that's a wonderful chart here that we got from our friends at ByteTree. Let's maybe take a step back from Bitcoin and come back in a second. Of course, Bitcoin is, I think, where we should focus on.
Yep.
But it does mean there's nothing going on in the crypto space as a whole. Of course, a lot of the altcoins, they suffer drastically. We also believe this is almost like a dot-com bubble moment where a lot of these projects might not recover from the pullback. However, we see a lot of exciting projects that we wanted to highlight. And I think one big theme that we pointed out during our market outlook for 2026 is prediction markets. And prediction markets, we expected that prediction markets will reach 100 billion in trading volume in 2026. But I think we were quite conservative with that estimation because we're now on track to yeah 3 or 4x that prediction. What's your point? What's your take on prediction markets? Or maybe let's give a quick definition of what we understand of
Sure.
prediction markets.
No, I do think that prediction markets are a combination of the Wall Street Journal and Twitter, or formerly called, or actually X and formerly called Twitter. It's a combination of social media and media outlets where people are able to see in real time the odds of geopolitical conflicts, their regional or national elections. And we do think that it has transformed how around the world, people understand the world stage or the world order in a way that becomes real time and at their fingertips on their phones or even on their laptops. And this is incredibly powerful. This is something that we've never really seen before, at least in multiple areas of our lives that really matter a lot beyond sport. So that's why for us we've seen that blockchain-based applications like prediction markets beyond just stable coins is a second product market fit for the crypto space to show both utility, but also at the same time, world-changing use cases that helps investors around the world to better understand how the blockchain is actually being used. And the good thing is that, our respective moms, Adrian and I, they don't even know when they're using Poly Market that this is actually a blockchain-based application because the entire complexity and the technology behind it is completely removed away at their fingertips and just on the back end, which is really powerful. So it's not surprising for us to see heightened national volumes on these prediction markets.
I think it's going to be a quite interesting year as well. We're going to have the World Cup in the US. We also have the midterm elections. So I'm pretty sure we will see
Yep.
more traction when it comes to prediction markets, but potentially also some risk. I know we had that discussion internally. For now, there's predictions on all kinds of things, and you could say when are things being taken too far, right? I think we've seen a guy during the Super Bowl running on the pitch. You're gonna get a payout, and I think he did it himself. So yeah, sooner or later there might be some regulatory guidance for prediction markets, but as of today, I of course agree with Eli. A lot of potential, and the beauty is that it's very easy to grasp for people, and it abstracts away from the complexity of the underlying infrastructure, which is the blockchain. I think another example that we have to highlight, and we spoke about this a lot, but it's one of the main attractions. I would say it's hyperliquid, right?
Yep, absolutely. So for those that are new to Hyperliquid is this derivatives exchange built on a blockchain, globally accessible except in the US because they also have, of course, restrictions of course, comply with regulations. But this is this global exchange that trades multiple assets. And recently, they actually expanded beyond crypto assets such as Bitcoin or Ethereum or Solana, where essentially traders can actually also trade commodities. And as a matter of fact, with the recent conflict that we've seen in Iran, um, oil is the second largest traded asset beyond Ethereum, Solana, or even silver and gold, and right after Bitcoin, which is really unprecedented. And Adrian and I always said the beauty of Bitcoin is that Bitcoin is almost the canary in the coal mine because it's traded 24/7. So when the market closes over the weekend, the first asset that gets hit is actually Bitcoin because it's 24/7 and globally accessible. But now we're seeing also that Hyperliquid has become and is trying to become this global asset index, where now we're seeing where the trader sentiment is going for various underlyings beyond just crypto assets, which is really interesting. And of course, we've seen news around Nasdaq expanding towards that direction as well with Kraken. And we truly believe that tokenization of assets, whether it's for spot markets as well as derivatives, is going to really help um, the investors around the world to price assets in the way that touches also over the weekend. And Hyperliquid is definitely the best archetype for that.
Yeah. No, what I love about Hyperliquid is it's much more tangible for traditional investors as well. It also goes along with the theme that we believe this is a return to fundamentals. Once again, people ask, where is the altcoin season? Will it ever come back? And we don't think it will ever be like in the past, because let's remember, most of the altcoin season, there are liquidity events, especially during COVID, purely driven with a sheer amount of liquidity in the system. But now going forward, investors clearly going to look way, way closer and see what is the actual value proposition. Are there actually revenues behind? Are there any cash flows being generated? And we love Hyperliquid as just an example to make that a bit more tangible. And just I made that comparison a lot, but in 2025, Hyperliquid made over 1.1 billion in transaction fees or protocol fees. If we compare it to a traditional venue, which would be the Chicago Mercantile Exchange, the CME, where you trade derivatives, they made around over 5 billion in transaction fees. So quite a bit bigger still, 4 or 5 times bigger than Hyperliquid. But the CME group has around 3.7 thousand employees, while Hyperliquid, they maybe have like 11 people behind them. So the capital efficiency of this technology is just outstanding. And now, as Eli pointed out, they expanded also into more real world assets. Oil is the most recent example. Also, during the boom around silver, Hyperliquid, they captured around 2 billion in trading volume, generated millions in transaction fee. So this is a perfect example how this technology can be disruptive, and how it could look like in the future. Will Hyperliquid forever be number one? That's questionable, but I think it clearly shows the potential of decentralized financial technology. And I think that should be the key takeaway here.
Couldn't agree more. And to Adrian's point, we don't know if Hyperliquid or whether Hyperliquid will be number one in the future. But what we see is real time traded volume, and on the back of that, cash flows and revenue for a high margin business. And this is unprecedented because Hyperliquid generates more volume than some of the traditional counterparts in the crypto space, whether it's like Kraken or Coinbase for some pairs. And this is something that we've never really seen before at a global scale, especially for, to Adrian's point, real world assets such as oil or gold or silver, etc. So for oil specifically, we've seen over $1 billion in volume on Hyperliquid, as reported by Bloomberg. And that's why for us, for fundamental investors paying attention to this asset class, as we said, investors are going to be a lot more selective. They're going to look at cash flows, at revenue, at user growth, at contribution margins, and everything that investors pay attention to when they're paying attention to, quarterly earnings reports from publicly listed companies such as Nvidia, Apple, Facebook, etc. So we truly believe that crypto assets are going to also be selected in that manner. And that's why showing the fundamentals is incredibly important. Doesn't mean that there are no risks, right? there could be regulatory risk and headwinds as hyperliquid grows to become more compliant, accessible in certain markets, such as the US, for example. But that's, of course, part of another conversation.
No, absolutely. And I know we went a bit yeah, deeper on some trends that we're seeing within the crypto space, but we also truly understand that, of course, from an institutional angle, from a traditional angle, the focus is on Bitcoin right now. It's going to be the start of a lot of institutional investors to make their first step into the digital asset space, and just giving the market regime usually that's where they start, and that's why to zoom out again and just go back to Bitcoin, and maybe for some of the listeners that love technical analysis, yeah, looking at the chart. I think not much has changed. I think we're still in a bear trend. At the moment, we struggle around the 70K level. I think this entire area here between 69 to like 72K, especially the Liberation Day lows, they are quite a resistance area at the moment, and we need a confident push through to really call it behaving right now. It's giving some early signs. I think what's more interesting is just ETF flows. Of course, the drawdown has been mainly driven by macro headwinds. We've seen big Bitcoin investors in Wales taking some profits off the table, and we've seen a massive deleveraging, especially on the retail side. However, if we look at traditional investors, it's quite interesting to see how they behave given the current market environment. On the left side, we see the US ETFs, and despite the 50% drawdown in Bitcoin price, the ETF Bitcoin holdings are actually down only 5%. So there's, as you can see, over 1.2, 1.3 million BTC in Bitcoin ETFs. But in Bitcoin terms, we only seen like, 6, 70,000 BTC in outflows. On the right side in Europe, even more surprising, since October, the all-time high, we've seen over 1 billion in net new inflows in crypto ETFs, and of course, the majority into Bitcoin. And for me, that is a clear indication that, yeah, some traditional investors, some of those more regulated investors, they start positioning themselves, and I also believe they start understanding the portfolio context. So we had a lot of regulatory changes. We've seen a lot of 180s of traditional asset managers allowing their clients to invest via ETFs and ETPs. And I think they did their homework and starting to understand that you shouldn't look at Bitcoin isolated. Yes, it can be a volatile asset, but if you treat it correctly within a multi-asset portfolio, it actually has some benefits. And just given the current price levels, who knows? No one has a crystal ball where we might be in the short term, but in the long term, you can really benefit from those diversification benefits.
And I do think that what we are seeing today is almost a dream coming true for 21 Shares coming out of building this company for the last 8 years to see real institutional adoption of this asset class. This asset class has been predominantly a retail-driven asset class, and of course, many wealthy investors were anticipating the 4-year cycle and the potential bear market ahead of the halving that would be coming out very soon in 2028, I believe. And for us as retail investors, we've seen that there was this anticipation, but for ETF investors and asset allocators with a long-term view on this asset class, with clear education on the principles and the value proposition of Bitcoin as an emerging store of value, they understood clearly that a 1 to 5% potential allocation with discipline in a diversified way could have benefits, and they've seen the benefits, of course, historically. But this is very important to highlight that past performance, of course, is not indicative of future results. But showing the data of the net flows is a good indication of institutional capital and patient capital coming into this asset class. Despite the fact that we had a 50% drawdown, there was a 5% outflow of this asset class, especially for Bitcoin in these ETFs. And it shows again strength and conviction rather than speculation, as we've seen historically.
Absolutely. And I think that's what it all comes down to for Bitcoin. Of course, it's easy to get caught up in the short term volatility. But by the end of the day, what is it? It is a hard asset. Bitcoin's supply is limited, as we all know. But that structural demand that is taking place or starting to build traction is not. So, once again, that's a very famous chart, especially over the last 12 months. Let's remember only 165,000 BTC are coming into circulation on a yearly annual basis. But over 770,000 BTC have been bought by, yeah, via ETFs, by corporations, by governments. So there's a clear, supply demand imbalance, which in the long run will potentially have an effect on price. So yeah. And once again, non-sovereign monetary asset in a world of geopolitical changes, the value proposition hasn't really changed despite any kind of short-term volatility. We also had a big milestone, right? I don't know if you've seen that. We now have officially 20 million Bitcoin in circulation,
Yeah.
which is crazy. So only 1 million left. How many years it's going to take until we reach 21 million?
114, I believe,
Exactly.
exactly. More than 100 years at least.
Yeah, and the majority of BTC is already out there, and that obviously feeds into that scarcity narrative, and just the inflation dropped below 1%. It's actually lower than gold. So let's see how it's gonna do going forward. Yeah, I mean, that's it from our side, I would say.
Yes.
Very quick market update. Of course, we always encourage you to check out our research. Eli and our wonderful team, we produce a lot of content, market analysis, portfolio construction analysis, valuation frameworks. There's a lot to uncover in this asset class. So obviously, make sure to check that out. But I think now we move to the most exciting portion of this webinar, which is the Q&A section. So if you got any questions, want to know, any insights on markets, specific crypto assets, please feel free to share them.
And there is a Q&A section, by the way, on Zoom so that you can leave your questions for us as well. I have a question for you, Adrian.
Tell me.
People always position Ethereum as, in the past, digital oil. So it was very interesting to see on Hyperliquid that the real one actually was surpassing the digital counterpart. But more specifically, jokes aside, um, where do you see the positioning of Ethereum with the other competitors that we've seen in the asset class, like from Kenton to Solana to even Nasdaq now partnering with Kraken, and Kraken has also its own blockchain called Inc. We don't know whether actually the assets will be traded on Inc. I think Kraken could be the distribution partner because they are actually now a registered bank in the US. But how would you position Ethereum, even though, of course, the clear focus has been Bitcoin, as we discussed?
Well, that's an excellent question. Of course, I think people always have to remember that this is an entire new asset class, meaning within that asset class, you're also going to have different sub-industries, subcategories, and therefore not all crypto assets are the same. Just like within equities, you have your defense stocks, pharma, tech, financials, and so on and so forth. And it's similar in the crypto space. Of course, Bitcoin as that digital monetary asset, but then you obviously have the infrastructure layer, or how we like to call it, the application stores, the app stores. And that's obviously where Ethereum falls into, because it is really the playground for a lot of innovation that is being built on top. So just looking at some of the structural trends, decentralized finance, but more importantly, stable coins and tokenization, um, which are all at an all-time high. So stablecoins see a lot of traction globally. We see pilots and projects coming out of everywhere around the globe. And the same for tokenization. It's definitely gaining traction within the traditional financial community, and tokenized assets are also at an all-time high. The majority is still on the Ethereum blockchain. So all of these structural trends are being built and live on top of the Ethereum blockchain, but we see competition. And I think that's, again, what it comes down to. Investors really got to do their due diligence and be almost like an equity analyst, closer to the market, and understand where the trend and the liquidity and the innovation is heading. So I would say for now, Ethereum, obviously, longest track record, very stable. I understand that a lot of institutions, if they do a first project, they might want to do it on Ethereum, but we've seen a lot of competition, especially from someone like Canton Network or Solana, which apparently just overtook Ethereum when it comes to number of RWA holders. So yeah, the winner is not clear, and it's going to be quite interesting how it's going to look like in the future. What's your opinion?
No, this is great. The only question mark that I do have as a follow-on question for you is that we've seen, and as you mentioned, that RWAs and stablecoins are mainly built on Ethereum, but Hyperliquid is almost has its own environment, and it actually has its own environment and its own blockchain. It's both a consumer application and a blockchain where developers can build on this app store with other financial services applications, which are incredibly exciting. But in that specific case, Adrian, if we're seeing silver and gold mainly traded on Hyperliquid, right, rather than on anything built on top of Ethereum, um, where do you see then the case for RWAs and stablecoins if most of the flows actually go to Hyperliquid and not on Ethereum?
I think it depends on the use case as well. Of course, with Hyperliquid, you have a bit more, you have a more centralized ecosystem, a more centralized network. But what is the purpose of Hyperliquid? It's high frequency trading, right? It's trading on-chain derivatives. Therefore, you want to make sure you have that fast execution and
Yeah.
fast settlement. While other use cases, if we talk about wholesale settlement or big assets being transferred, what's more important is maybe the permissionlessness of the network,
Right.
the security, the stability, um, and therefore, for some use cases, that's where we could see Ethereum emerge. But once again, I think also Ethereum needs to make sure to have the competition close by and do the appropriate pivots if that needs to be.
So it feels like Bitcoin is in and of itself its own competition, despite the fact that in the past we've seen forks like Bitcoin Cash or Bitcoin SV. Then there is, from a classification perspective, Bitcoin and then app stores, and like you always said, the innovation layer. So basically, the next generation of PayPal and Venmo. But when it comes to Bitcoin itself, um, the positioning of Bitcoin has always been as an emerging store of value, especially for long duration periods and not for the short run. Do you see a world where Bitcoin could evolve? We've seen, for example, over $1 billion in volumes on the Lightning Network that enabled investors to transfer on the Bitcoin network with another environment like the Lightning Network. Does that expand also the total addressable market of Bitcoin? As gold expands, it means that also eventually the potential of Bitcoin expands. But what about the other verticals like payments, as we've seen with the Lightning Network, which had actually a very good traction lately and tells a very good story around Bitcoin as a storehold of value, but also as potentially an, I would say, early stage payment network, despite the fact that the Lightning Network is as long as we've been in the asset class.
Yeah, yeah, no. I mean, that's a good question and a good debate. I believe we could see some more innovation being built on top of Bitcoin. Of course, we've seen a lot of early efforts. We have a bunch of side chains or layer twos trying to build on top of the Bitcoin network,
Yeah,
meaning building their own app store on top of the Bitcoin blockchain. But I think the big difference is Bitcoin from ground up is not purpose built for those kind of use cases.
right.
So it takes a bit more of a lift. And I also believe in the long run, the majority of Bitcoin's valuation will always fall back on the store of value narrative, similar to gold. Of course, gold is being used for jewelry, for manufacturing, for hardware, for technology components whatsoever. But it doesn't make up a 35 trillion market cap. The majority really comes from kind of the store of value nature of gold. And I think it's going to be like this for Bitcoin as well. Because of its hard limit at 21 million, that's where the majority of value will be captured. But we might potentially see a monetary premium depending on whatever is being built on top. What do you think?
I agree. And I do think that, this is similar to how businesses are built today. When you think about Amazon, people thought about this online bookstore, and then they came up with the cloud service being called Amazon Web Services that actually empower most of the startups in the Silicon Valley to have access to cloud services instead of building their own servers. So there's an expansion in business lines or in features. And I do think that we could see that as well with Bitcoin and other networks where they're reinventing themselves. We've seen that with Nokia as well. Nokia actually failed, unfortunately, in the mobile sector. Actually, Adrian and I, I'm sure we had Nokias in
Of
Adrian's
course,
thousands.
of
We
course.
were big fans of BlackBerry as well, and Nokia has been able to capture with the infrastructure that they built for the past 20 years, AI data centers, to offer infrastructure for hyperscalers. And I do think that we could see that as well with multiple assets within this asset class, which is incredibly exciting. So yes, I think the lion's share of Bitcoin will always be as a monetary asset, as a global storehold of value. But it's possible that we see also an expansion of the use cases as well, which shows again stories that we could tell to investors like yourselves on this call, but also to the global network that people pay attention to this asset class.
Wonderful, wonderful. I think we're already quite some time in.
Yep.
I mean, thank you so much for everyone joining our call. Of course, if you got any questions, feel free to reach out to us. Again, make sure to check out our research. Feel free to add us on LinkedIn, on X. Feel free to reach out to Eli. He's a very nice person. He make sure he answers. But yeah, we'll definitely keep you posted. We're gonna have a call like this once a month, and we're looking forward to the next one.
And
Thank
looking
you.
forward to getting the feedback as well. Thank you so much, Adrian. That was great.
Thank you. Bye bye.
Have a good day, guys.